Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden secrets behind company filings and expose the truth. Today we're diving into Streamex Corp's latest report to see what is really going on behind the scenes. Before we get into the nitty-gritty of this report, if you enjoy getting these corporate insights without all the fluff, make sure you hit that subscribe button. And for more exclusive content and to join a community of fellow corporate sleuths, check out our Discord server linked in the description below. So what we have here is an 8K filing, which is basically a report for significant events that shareholders should know about. This one from Streamex Corp tells us about a new deal they've inked, and it is pretty interesting. They're essentially getting more money through a convertible debenture. Think of it like a loan that can turn into stock. The company, Streamex Corp, is working with the US Securities and Exchange Commission, which is standard for publicly traded companies. They're based in Delaware, and their stock trades on the NASDAQ. Their main thing is common stock. This is what most people think of when they hear stocks, pieces of ownership in the company. The big news here is about a financing agreement. Streamex Corp has been working with a group called Ya the Second Ltd, which they refer to as Yorkville. They've been issuing what are called convertible debentures. These are like loans, but the lender can choose to turn them into shares of stock instead of just getting their money back with interest. This filing is actually an amendment or a change to an existing agreement. They've already done this before in July, August, October, and November of 2025. Now, on the 17th of December 2025, they've made a fourth amendment to the debenture purchase agreement. Don't get bogged down in the numbering. What is important is that they're continuing this financing route. And this isn't just a small amount. They've issued a second round or tranche of these convertible debentures worth $25 million. This is a substantial amount of money being raised. This debenture is set to mature in December of 2027, meaning that is when they ideally want to pay it back. Now, about that conversion part, if Yorkville decides to convert these debentures into stock, they'll be getting shares of Streamex Corp. Common stock, the price at which they can convert is a bit complex, but essentially it is tied to the market price of Streamex's stock. There is a fixed price, and then there is a price that is a percentage of the stock's trading price. It is important to note that when they issued this $25 million debenture, the company didn't actually receive the full $25 million. They received about $24 million. This is because there are fees and discounts involved in these types of deals. So they got 96% of the face value. That is a 4% discount right off the top. Streamex Corp does have the option to pay back this debt early, but if they do, they have to pay an extra 10% as a prepayment penalty. This makes early repayment a bit costly for them. There is also a cap on how much stock Yorkville can own if they convert. They can't end up owning more than 4.99% of the company's total stock. This is common to prevent a single investor from taking over a large chunk of the company through these conversions without a more formal takeover. This section just confirms that this new debenture is a direct financial commitment for the company. They owe money, it is not some hidden deal. And here they're stating that these convertible debentures and the shares that might come from them are being sold without being officially registered with the SEC. This is allowed under certain provisions like Section C of the Securities Act, which often applies to private sales to sophisticated investors. They're mentioning that Yorkville called itself an accredited investor, meaning they're considered financially sophisticated enough to handle these types of investments. Now, moving on to another event, on the 16th of December 2025, the company held a corporate update webinar. They've attached the investor presentation from this webinar as an exhibit. This is where they likely tried to put a positive spin on things and talk about their future plans. Companies often use these presentations to drum up investor confidence. So if you want to see what they're telling investors directly, you'd look at this investor presentation. It is basically marketing material, but it is filed with the SEC, so there are some rules about what can be said. They're saying this presentation contains forward-looking statements, which are basically educated guesses about the future, and they're warning people not to take them as guarantees. Finally, this section lists all the official documents attached to this filing. We see the original debenture agreement from November, the amendment to the purchase agreement, and that investor presentation. So, what is the big picture here? Streamex Corp is continuing to raise money through convertible debt. This is a common strategy, especially for companies that might not be able to get traditional bank loans or want to avoid diluting their stock too much right away. However, it is a double-edged sword. On one hand, they get cash to fund operations or growth. On the other hand, this debt has to be repaid, and if they can't, or if the conversion price is favorable to the investor and the stock price rises significantly, they could end up issuing a lot more shares, which would dilute the ownership of existing shareholders. The fact that they just raised $24 million through this second tranche suggests they still need capital. The terms also indicate some flexibility for the company. But with potential penalties for early repayment, the 4.99% ownership cap for the investor is a standard way to manage potential dilution and control. Looking at the overall direction, Streamex appears to be in a growth or turnaround phase where they rely on external financing. The key risk here is their ability to generate enough revenue and profit to service this debt and eventually repay it, or for their stock price to increase significantly so that conversions are favorable to them. If the stock price doesn't perform well, the debt can become a burden. The investor presentation is likely showcasing their comeback story or future potential. But the real test will be in the execution, and whether their business model can generate sustainable profits. Ultimately, Streamex is navigating a path that involves leveraging debt that can convert into equity. It's a strategy that can work wonders if the company's fortunes improve. But it also carries the inherent risk of increased dilution and financial strain, if things don't go as planned. Alright, that is our breakdown of Streamex Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.